Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar continued its upwards trek on Wednesday, and now as you can see the market is hit its objective, that is, from the break of 74.05 to 74.60. Now the market seems to have put a bit of a full stop at this level, or hit the brakes heavily, and therefore looks for a slight pullback. In view of the pattern, the market may actually reject this level and then look back towards a pullback to somewhere around 73.70 again. In light of the pattern, however, though, if we just click this along, the market may actually eventually stage a further rise from the pullback. So if we do see a retreat, as we currently see, from 74.60, then back towards around that 73.70, 80, and then possibly pushing on from there. So this is sort of trajectory I'm looking for in the market. So a slight pullback and then push on, maybe retest the highs around 75 cents. The euro, after respecting the 107.50 level and with the bullish divergence coming in quite clearly, we can see the market's rallied to its first objective around 108.50. In light of the pattern, though, it is somewhat weak, but still, I'm not going to give up the view as of yet for a further uptest. The reason behind that is the market has travelled quite considerably from 111.80 down to 107.50. And therefore could see any rise beyond 108.50 to maybe around 109.20 and then possibly retest the downside around 107.50. After a sudden rejection, that is, from the top side around 129, the market is now finding support around this level where the uptrend is for dollar yen at 126.80. In light of the pattern, I feel the market has buckled somewhat. So let's see if the bears can continue this move to the downside. Quite a significant trend, I would say, and that could give a move beneath 126.80 to 123. But some caution there because the market is still relatively firm in light of the recent rally. So could see a bounce and retest the 130s. But nevertheless, let's see if the pullback has enough momentum to the downside and take a challenge at this level around 126.80. Sterling still holding respectively above that 130 level, and with the market still holding to some of its gains from the overnight, could see a further push to the upside around 131.20 or up to about 131.60. In light of the pattern, though, I would like to see this all strengthen up a little bit more to give further hope that the market can rally back to 133. But one step at a time, let's see how the market plays into today's session. After that pullback from the top side, the support was respected at 191, and from the rebound, it's actually showing some guidance now for a further rise. However, I still feel the market will be contained for sterling Kiwi around 194, and with the base holding temporarily at 191. After the shooting star confirmation from the break of 1,960, the market has found a bit of momentum in front of that level around 1,920 to 26. However, the retracement is, to me, looks like it's just retesting that break level around 1,960. If we see a rejection today, because we are quite close to it, then we are looking back towards that bottom side of the range, somewhere around, as I mentioned, 1,920, and reassess from there. The bearishness coming back into oil after the rejection of 109.50 still holds. And in light of the pattern, I feel the market can actually obtain its direction back to the bear case and therefore look towards the bottom side around 92 to 93 as a potential target. But a little caution there, like previously seen from this base. The bulls are ready to take the challenge back to the top side again. So maybe if you are playing from the shorter side, do respect this level again accordingly to your risk management, just in case we do see a bounce. Well, that wraps it for the morning. Thank you very much for joining me, but please join me later for the end of the day wrap, and also keep an eye out for the intraday report.